Welcome back to Class Time, your daily classroom for CSEC and CAPE subjects. Today, we'll be discussing CSEC principles of accounts, and our topic will concentrate on the double entry system of accounting. I'm Latoya Chambers-Hogg. So today, students, we will be looking at the double entry system of accounting with an emphasis on revenues and expenses. Before we delve in our lesson, though, students, what is it that we hope to achieve? Let's set the objectives. At the end of the lesson, students, you should be able to define clearly the meaning of the word revenues. State correctly the meaning of the word expenses. Differentiate clearly between revenues and expenses. Explain the double entry rules that govern revenues and expenses. Last but not least, students, you should be able to post accurately related transactions to revenue and expenses accounts. Sounds practical? Well, let's go. However, for this class, you will need your ledger, your calculator, your pens, your pencil, your textbook, and don't forget that will to win. Are you ready? Let's go. Now, students, COVID-19 is on the lips of everyone. And hasn't it been wreaking havoc in the business world? Let me ask you something. How has COVID-19 affected most businesses? In a negative way? Is that what I'm hearing from you, Joan? I agree. But you know, it is also affecting some businesses in a positive way, like those who produce like toilet papers, sanitizers, and masks, don't it? All right, because those things are in demand. But for most businesses, students, COVID-19 is really hitting them hard. Now, what are some effects that COVID-19 is having on these businesses? Well, I'll start with the first one for you. Goods or services are not being sold. And you can imagine why. So, you know, they're becoming dead stock, and you might have to go to the dead stock warehouse to get them cheap. Of course, a lot of people say nothing not keeping except COVID. So you see they close them in most stores. They're just there. Then we have workers being laid off. So sorry for this young lady. She has to pack her bag or her box. Some businesses too have closed. And closed due to what? Coronavirus. Some businesses too have been thinking about what? New business ideas. Very good. In order to remain what? Open. You see, the same old just can't work again. So therefore, they have to try now to pivot to new ideas. But what is really causing COVID-19 to have these ripple effects on the business? Yes, I see your hand. No, pay attention. Yes, Michaela. Oh, the business is not making enough money so that it can keep open. I agree with you. But let's see if we can put this a little better. The business is not making enough money. Money that is made by the business, what we call it? Yes, Joan? Good. Income. All right. Let me put you to the test. Give me another word for income that begins with R. All right, Paul. Revenue. I agree. Good. Now, bear in mind that we're going to look now at the double entry principle relating to revenues and expenses. Let's start with revenues. What are revenues, students? Revenues refer to income earned by a business mainly by the sales of goods or services. Zoom up a little on that definition. Mainly by the what? Sales of goods and services. Sales of goods. Refer back to last week's lesson. Give me one word for sales of goods. Sale of goods. Sales, good. So evidently, from this definition, students, you can see that what? Sales is a revenue, good. Or sales are revenues. Now, there are some other sources of revenue. We have set the foundation in our students, so make sure you're taking your notes. There are other sources of revenue, and these include 1, commission received, discounts received, a reduction in provision for bad debt, and rent received from sublet of premises. Now, to better understand the double entry rules that govern revenue, students, we will analyze how both of them affect capital. All right? Now, let's reason. What effect do you believe revenues will have on capital? The owner has invested money in his business, and he's also earning additional money. What type of effect you think revenue then is going to have on his capital? Will it have an increasing or a decreasing effect? Kimaya? It is going to have a what? Increasing effect, because the money is what? Coming in. Good. Boom. All right. Now, what happens when there's an increase in capital? What do we normally do to the account? We normally do what? Come on, students. We normally credit the capital account. Therefore, students, likewise, when it comes on to revenues, what do you think we're going to do when posting it to the ledger? Will we credit or will we debit when there's an increase? Now, we will credit the revenue account to show an increase and debit it to show a decrease. Hold it. Don't let it go. Now, students, whenever there's an increase in revenues, we credit the account. Whenever there's a decrease in revenues, we debit the account. Write it down. Those who can, take a screenshot of this. You need it. See it there again? For revenue accounts, to record an increase, we do what? Credit. Very good. And to record a decrease, we do what? Debit. Beautiful. Monica, pay attention, please. Now, let's just see if we can put this together nicely by doing a class assignment. Our first transaction states 2016, May 2, rent received in cash. Let's pull on what was previously learned. What's the first thing we're going to do? Identify the 2 items that are affected by this 1 transaction. What are the 2 items that are affected by this 1 transaction? Rent received in cash. Rent and cash. But let's be specific. What happened with the rent? We did what? Received. So therefore, the 2 accounts that we're going to need then, students, will be 1, rent received, and 2, the cash account. Good? Rule up now. Let's go. Drop your T account. Put in your headings. Date, May 2. All right? And wait for me. So May 2, rent received in cash, $5,000. Now we have received the rent. And rent received is a what? Revenue. Good. And what did we say rent received is classified as again? Revenue. And whenever there's an increase in revenues, we should do what? Credit the account. All right. So we're going to credit rent received. We received the rent in the form of cash. Cash is an asset. And what does the double entry rule say? Whenever there's an increase in asset, we're going to debit. All right? Fine. And look at May 6. Commission received by check, $350. Commission received again. That's a what? Revenue. Are we increasing or are we decreasing? We are increasing. Rules again apply. Whenever there's an increase in revenue, we're going to do what? Credit. So credit the commission received account. And what did we get it in the form of? Check. So therefore, we're going to need to open up a what? Bank account, because all checks will pass through the bank. And we're receiving the check. So will we increase or will we decrease? We are going to increase. Bank is an asset. Good. You're learning, man. And whenever there's an increase in asset, we will do what? Debit the account. Now let's demonstrate in the ledger. You would have ruled up because I asked you to do that and to wait on me. All right. So here's our rent received account, student. We're in the ledger. Good. It's a revenue. We have just received rent. Apparently, we had sublet a part of TVJ studio, right? And to somebody. And we are now collecting from them what? Rent. Isn't that money coming in for TVJ? Of course. So there's an increase. Rule. Whenever there's an increase in revenues, we will do what? Credit the account. So watch me now. Which side is the credit side of the T account? The left side or the right side? The right side. That not change. Debit to the left, credit to the right. All right. So here we are on the credit side. We put in the date, May 2, 2016. How much rent we collected? $5,000. So the $5,000 will go under the amount section. See there, students. Hold it. Now, what's the name of the other item that was affected along with rent received? Yes? Kimaya again. Cash. So where will we record cash? Yes, Val? In the details section. So let's go. See it there? All right. Now, if you notice, folio is empty. Now, the folio column should direct us to where we can find the cash account. And where will we find it? In the cash book. CB4 cash book. Now, students, it simply means that this represents one of the double entry. This is just a single entry. And we would need to complete this double entry in the cash account. All right? So let's see what happened here. In the cash account, because cash is an asset, we would debit, see there, students, we would debit the cash account with the same $5,000 and the details rent received. Good? So that would complete the double entry for posting this rent received as a revenue. Credit the revenue account because we're increasing in revenues. Debit the cash account because we're also increasing in the asset, cash. Good. It's not bad, not true. Practice makes perfect. So you have to learn to practice up your accounts. Now, let's look at the second one. 2016, May 6. This time around, students, we have received commission by check. Have you ever seen those guys walking around selling items in some large boxes, probably for a company? Sometimes they have like cosmetic products, etc. And they tell you like, if you buy this today, then you'll get this at half price, etc. Now, usually the more they sell, they get a little extra that the business call what? Commission. All right? Now, let's say that we have received commission by check of $5,000. Commission received, again, is a what, student? It's a revenue. Good. Therefore, in receiving this revenue, are we increasing in revenues or are we decreasing? We are increasing. Go back to the road code. Go back to the rules. What does the double entry rule state again? Whenever there's an increase in revenue, we should do what? Credit the account. So here we are in the ledger. We've opened up our commission received account. And we're on the credit side because we've increased in revenue. We're following principal students. We're following principles. So we come under the date section 2016 on the credit side. What was the amount? $5,000. Put in the amount. Now, what's the name of the other item that was affected? Check. And check must be synonymous to bank. So in the details section, we're going to write what? Bank. Notice folio was empty. But anyhow, the bank account is funding the what? Cash book. So in the folio column, you have CB here, which represents cash book. This simply means that if we go to the cash book, we should see the bank account carrying the same information as it relates to the transaction that took place on May 6th. So the folio is like a compass directing you to where you can find the other half of the double entry. Is that clear, students? All right, good. So here it is in the commission received account, the revenue account. We've increased in revenue, so we credit the account. And let's see what it would be like now in terms of us actually trying to close off the account at the end of the month. Now, look on the board here. If you notice, we're closing off at the end of the month. And to close off, on the debit side, I have May 31, balance CD as my details. Students, think back to last week's class. Would I be correct? Would I be correct? I taught you a very important principle last week. Would I be correct in recording balance CD as details? No, we would not be. Remember now, commission received is an example of a revenue account. And when we're closing off revenue accounts, remember last week I told you that some account balances are transferred. Revenue accounts happen to be one of those, or a set of those accounts whose balances are transferred. So instead of saying balance CD, we will say what? Because the balance CD would be incorrect, you wouldn't get the mark for it in exam. So therefore, you will have to do the right thing. Instead of saying balance CD, you'll have to say transfer to profit and loss account. This is a common mistake for students. Try not make it, or else you're going to lose your mark. It even can pop up in multiple choice too. So know your principle. Practice makes perfect. So this would be the correct thing in closing off the commission received account. All right? And you don't get your ticky. All right. Now, the other half of the transaction would be entered in the bank account on the debit side. The amount would be $5,000. May 6, of course, would be the details. In the folio, you notice I have GL, which stands for what, Monica? General Ledger. Telling us what? Telling us what, Jenny? That the commission received account is found in the general ledger on page what? 5. And again, guess what happened? And me make up the page number. All right? Good. Now, before we go a little bit further, I have a trivia for you. Let me see how well you've been listening and learning. Which of the following best describes the double entry system of accounting, students? Is it A, a ledger account must have two sides? B, an account must be written twice in the ledger. C, each transaction must be written in 2 subsidiary books. D, each transaction must have a debit entry and a credit entry. Think about it. The answer is coming up. Now, in the beginning, we said that businesses are being affected by COVID, and because of that, they are closing down, persons are getting laid off, etc., etc. It simply means, therefore, student, as we had established it, that enough money, enough income, enough revenue is not coming in to sustain the business. Because the business has what? Expenses to cover. And if you don't put in, you can't take out, right? If you don't earn, then you can't spend, right? So you'll face shutdown conditions. But having looked at revenues and having digested the double entry principles for it, let's now look at expenses. First thing though, what are expenses? The cost of operating the business. And I'm hearing you loud and clear out there. They're also known as what? Operating expenses. Good. Now, the cost of operating the business. Operating expenses. Can you think of any expense that a business might incur? Light bill? All right then, if you say that, Paula, light bill is one, of course. Even TVJ studio. See here, they need the electricity to run all the different equipment, right? And provide lighting. So that's one type of expense. And there are others. Rent paid, commission paid, wages paid, telephone expenses, even if it's phone card you buy for the company's cell phone if you're not on a CUG. And even if you're on CUG, it is still telephone expenses, right? Now, these are examples of expenses. Now, again, remember I told you before that in order to understand the effect of revenue and expenses, we'll actually analyze how they really affect capital, right? So, let me ask you, what effect do you believe expenses will have on owner's capital? When an expense occurs for a business, when the owner has to pay light bill, etc., what do you think is going to happen to the capital? Will it increase? Will it decrease? You think? What's in your head? It is going to decrease. Very, very, very good, Derek. It is going to decrease. Now, go back to the double entry for me. Whenever there's a decrease in capital, what do we do to the account? We do what? Debit the account. Thank you very much, Derek. You're paying some attention, man. Good. Now, because expenses will have a decreasing effect on capital, we will also have to basically debit the account when we incur an expense. Now, students, hold this road code. You're going to need it. Ready? Whenever there's an increase in expenses, we will debit the account, quite opposite to revenues. Because with revenues, we do what? Credit. Good. So if you know one, you automatically know the other because it's the opposite. Whenever there's a decrease in expenses, we are going to do what? Credit the account. Beautiful. Hold it. Record it. Don't let it go. Increase in expenses, we debit. Decrease in expenses, we credit. Now, what difference do you notice about revenues and expenses? If you were listening carefully, think about the examples for each group that we discussed. What's the difference? What's the difference? All right, Sims? All right, I agree. The revenues we get, all right, and the expenses we do what? We pay out? All right, good. Now in accounting language now, revenues are what? Received, while expenses are paid. Revenues are received while expenses are paid. So you'll hear me talk about commission received. That's the what? Revenue. If you hear me say commission paid, that's the what? Expense. Rent received, that's the what? Revenue. Rent paid, that is a what? Expense. Look out for these things, students. CSEC can set you up sharp on your principles of account skills. Now, I made up a little mnemonic to help you. Rascal Roger embarrassed Peter. Rascal Roger embarrassed Peter. Rascal Roger, revenues are received. Embarrassed Peter, expenses are paid. Can't forget that. Hold it. Don't let it go. All right. Now let's look at an example now to actually bring out the double entry for expenses. Whenever there's an increase in expenses, we do what again, students? Opposite to revenue, we are going to debit. Whenever there's a decrease in expenses, we are going to credit. All right. Now, May 20, 2016, we paid rent by cash, $7,000. Sorry, which two items are affected? Rent and cash. Good. Analysis. Analysis. We use the cash, which is asset, to pay the rent. Do we have more asset in the form of cash or do we have less? We have less. So we will do what? Credit the cash account. Expense was incurred. We've increased in expenses. So we are going to debit the rent account. Good. You can't forget these principles in us, students. Hold them tight to your bosom. Don't let them go. Now, let's demonstrate in the ledger. You would have had your ledger sheet drawn up, right? You must be proactive. Stay ahead of miss. Stay ahead of miss, all right? So here we are in the rent account. We had incurring expense, so we increased in expense. So we're going to go on the what? Debit side of the rent account. It was on May 20, 2016. You enter that in the what? Date section. How much did we pay for rent? $7,000. So under the amount column, we are going to enter our what? $7,000. Good, students? What's the name of the other item along with rent that was affected? Cash. Good. So in the details section, we are going to enter cash. Question to the class, where can we find the cash account? In the cash book. Good. So in the folio, I will enter what? Will I write out the words cash book? No. C for cash, B for bank. Sorry, B for book. You see the account lesson just so sweet. I'm even making errors. So let's go. So in the folio column, we're going to have CB, which represents cash book. All right? So we've debited the rent account to show an increase in expense rent. Now, what's the correct way to close off this account? It's a rent account. See, I'm tying up everything nicely for you and with you. Let's see. Is it this way? Where would have details balance CD, rent, and expense. Think back to last week's lesson, students. Transfer knowledge. Will I use balance CD to close off the account? No, it's a strike out. We will not use balance CD. We will use transfer to profit and loss account by principle. Remember, you were taught last week that when we're closing off expense accounts, we use what? Transfer to profit and loss account. Likewise, what? Revenue accounts, specific revenue accounts. Because you'll find later on that sales, though a revenue, may have to or may have different details. All right? Good. So, This is what it would look like in the cash account. Good? And we would close off the cash account using balance CD, of course, because it's neither a revenue account, neither is it one that tracks the movement of our stock. All right? Neither is it an expense account. All right, students? Good. So we'll use the balance CD. And remember, if CD is on the debit, BD is on the credit. If CD is on the credit, BD is on the debit. Can't forget that principle. So this would be the correct one, and you'd get your mark in CSEC. But if you ever do something else, dog, eat your supper. You won't get that mark. Now, try these for me, students. Ready? Right. Come on, pay attention. Right. Stay focused. You know that I love it when you're staying focused, all right? Now, Richard, close that book. Yes. Thank you. Focus. Instruction. State the accounts to be debited and those to be credited. State the accounts to be debited and those to be credited. Paid rent by check, that's the first one. Commission received by check. Paid general expenses by cash. Rent received by cash. Paid rent by check. Yes, Kimaya, I recognize there's no money there. It's not full transactions, basically, students. This is just basically to find out how much of the knowledge, the double entry knowledge that you have grasped. All right, so I want to know if you can accurately debit and credit. All right, I know there's no money to each of them. So paid rent by check. Which two items are affected? Rent and bank. Very good. When you see check, you know it's linked to bank. You pay the rent. Revenue or expense? Expense. Expenses are paid. Now, what will we do to the rent account in this case? We are going to debit the rent account and we will credit bank. Very good. Second one, commission received by check. Come on. Think. Commission received by check. Waiting on your response. Yes? Celia, I see your hand there. Commission received by check. Which two items? Commission received and check. Beautiful. Which, don't sit yet. Don't sit yet. Don't sit yet. Which two items again? Commission received and check. What will we do to the commission received account? We're going to, no, not debit it. Remember now, it's commission received, not commission paid. It's a revenue. Good. You can't forget that, you know. So therefore, we're going to do what? Credit the commission received account and do what? Debit bank. Good. What about general expenses paid by cash? General expenses. It's a giveaway. It's an expense, so we're going to debit the account. Good. All right. And then when we debit the general expenses account, Eulalie, pay attention. What will we do to the cash account? We are going to credit it. Who said they're not learning? Every child can learn and every child must learn. Let's look at the last one quickly. Rent received by cash. We're going to do what? Rent received. Revenue again. So we're going to go back to our double entry principle. Whenever there's an increase in revenues, we're going to credit. So you're going to credit what? Rent received, and then you're going to also debit what? Cash, because you're increasing in the asset, cash. Students, you just can't forget your double entry principle. They're like the road code for accounts. All right? You must bear that in mind at all time. Practice, 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 practice. All right. Now, remember that trivia that I asked earlier? Here's the answer. Which of the following best describes the double entry system of accounting? The answer. Each transaction must have a debit entry and a credit entry. Marlon, I know you'd get that right. You think you're easy? All right, good. So each transaction must have a debit entry and a credit entry. That's a common multiple choice question, you know. You say once you master your principal students, I don't know what CSEC can come with to beat you. All right? So today we have looked at the double entry principles of accounting with an emphasis on revenues and expenses. Let's just summarize nicely our key points. Make sure you're taking notes. You have been taking notes because you don't know when I'll be testing you. All right? Good. Anything can happen. This is COVID. All right. So let's go. Key points. Number one, whenever there's an increase in revenue, we do what? Credit the account. Good. Whenever there's a decrease in revenue, we debit the account. Beautiful. Key point number three. Whenever there's an increase in expenses, students, we do what? Debit the account. Whenever there's a decrease in expenses, we will do what? Credit the account. Now, if you note or look at this carefully, you will again see that the double entry rules for revenues are opposite to those for expenses. So if you know one, you automatically know the other. All right, students? Okay. Now, key points continuing. Revenues are what? Received, while expenses are what? Paid. And what was that little mnemonic that I taught you? Rascal Roger embarrassed who? Peter. Rascal, revenue. Roger, received. Revenue, received. Embarrassed, Peter. Expenses, embarrassed. Peter, paid. Expenses are paid. That little rascal Roger embarrassed Peter. Don't forget it. Now, in closing off a revenue account, except for sales, we use what? Transfer to profit and loss account as details. And in closing off an expense account, we also use what? Transfer to profit and loss account as details. Students, you cannot forget these key points. What I want for you to do, I want you to go over each of the transactions that we have gone through today. I want you to sit, make up your own list, at least 5 revenue transactions and 5 expenses related transactions. Post them to the ledger. Give me feedback. And I'll let you know if you're on the right track. Students, that's all for today's lesson. I am Latoya Chambers Hogg.